Hello my fellow freedom builders and welcome back to the channel. In today's video I am going to take a look at something a bit more of a long-term play, a bit more long-term speculative you might say, and that is the fact that Joe Biden, the President of the United States, he is talking about a huge infrastructure plan where he's planning to pour something like $3-4 trillion into rebuilding a lot of things in the United States. That could be schools and hospitals and highways and whatever you can think of that takes some sort of construction machinery, material, labor force and so on. So let me give you a quick glance at what we're talking about here if you haven't heard it. Now, I should say right away that this has nothing to do with any politics. I'm not arguing if this is right or wrong, if it is the right way to spend the money, if it makes sense to print a ton of more money to make this infrastructure plan. I'm not arguing for or against if it will overheat the economy or anything. We are simply having a look at the stock perspective here. Is there some investment opportunities that we can take a look at? And now, first of all, as you can see here from CNBC, here's how Biden's infrastructure package will likely tackle climate change. And now this article has some focus on the climate change and the fact that Biden is aiming for carbon-free power generation by 2035 and net zero emission by 2050. Again, we could argue, is this reasonable? Is this realistic? And so on. Not the focus for this video. Now, what you can read here is that Joe Biden is expected to introduce up to $3 trillion in spending on effort to boost the economy, including rebuilding aging infrastructure like highways, bridges, and rail lines, and investing in technologies to reduce planet-warming greenhouse gas emissions. So that is basically what we need to know here. There are a lot of details and I'll put the link to this article below. But otherwise, just Google something like Joe Biden infrastructure plan or something like that. So we are talking about $3 trillion and it is nowhere near certain that he can get this plan through. It'll take a lot of negotiations. There'll be a lot of, I guess, resistance from Republicans. Not that they don't like all the extra people that will be working all the infrastructure, but as you might know, the Republicans, they want, or at least they used to have a policy, an angle to the policy where they wanted not just to print money, to spend money. And of course that went a bit sideways under Trump. But right now they have all of a sudden refound their old policy, and they are absolutely critical, to say the least, towards the Democrats' spending of money. But as I said, there'll be a lot of negotiation. This is not a plan that will come quickly, but we can be a bit proactive and have a think of what would it mean for our future long-term stock holdings. So you can have a good look at this article. There's a lot of details in here, but what I will show you and what I'll have a look at today is what kind of companies could gain from such an infrastructure plan, or just from the rumors of it. Because as we know, the stock markets tend to move on rumors as much as facts, actually. So what I did was that I went into Stockopedia. As you know, that is my favorite go-to place when we're talking about fundamentals. And what I did was a simple screen. And such screens are very easy to set up here. I called it infrastructure, the scan here, the screen, and I chose country. I chose the United States. That is most relevant since that is where the infrastructure plan is really gonna happen. But you could speculate or investigate if any companies, it could be Canadian, Mexican, it could be European or whatsoever, if there are companies that are also in a position to gain from such a plan, even though they're not from United States. What I did is I put a market cap limit, so I was only looking at companies above 4 billion euro. it was just a number I pulled out. It could have been 2,000 or 10,000 millions, so 2 to 10 billions. But it was just to narrow down the search a bit, because at a billion euro in market cap, I got way too many candidates. So I wanted to look for the larger candidates also, because in an infrastructure plan, you might see a tendency to choose some of the larger players if you want to have some nationwide plan. So that is kind of what makes sense here. Industry group. I've chosen construction materials, machinery, equipment and components, and construction and engineering here. You could argue there should have been others, but these were just the first that popped into my mind here. And I chose a stock rank, that is Stocopedia's own stock rank here. I chose that to be greater than 70. And that is because I just wanted to make sure that it was some decent fundamental quality in the company here. And what turned out was 45 results. And what I did down here is that I took, of course, the name here, the industry group, stock rank. You can see that here. You could simply just do so that the 98, the closest to the 100, was on the top. The best was on the top. You could choose to see the largest as to market cap here. I also put value rank, growth rank in here if you wanted to go for something with a bit of a higher value. For instance, Mastech here is showing some great value, is showing some great stock rank, and is showing some great growth rank here. So that could be a stock that we would have to have a look at. But what I'm going to do now, because of course I'm not going to go through all of these, but I'm just going to scroll slowly past all of these. And if you want to write them down, you can simply just pause the video and write all of them down and check them out in your own software. But let me just get to the bottom here, because then I'll show you how I will look at each and every of these stocks. If you have Stockopedia, you can also just download them. That is also a possibility. But what I would look at here, or how I would go to this, is I would take the first one, and to be honest, Caterpillar is already in my US portfolio. But as you can see here, maybe you don't know Caterpillar, then you ought to. Caterpillar is a manufacturer of construction and mining equipment, diesel and natural gas engines, industrial gas turbines, diesel electric locomotives, and so on. There's a lot of descriptions down here, but there's no doubt that you know the Caterpillar from their yellow machinery, construction machinery. So Caterpillar would be an obvious choice to have a look at here. Now, when we look at it, we can see that it is machinery, equipment and components. Stock rank of 80, that is great. Huge market cap. Value rank is not that amazing. We can have a look at that in a second. Growth rank is fairly well. We can go in here and have a look at it in Stockopedia. And we can see that they're having a PEG ratio of only 1, meaning that the current PE divided by the expected growth of earnings per share next year only equals 1, which is absolutely amazing for a company like this. You can see earnings per share growth here, 37%. They're paying a dividend yield, even if you want to focus on that. Return on capital, return on equity, and operating margin is outstanding, both compared to the overall market and to the industry. You can see that their health trend, their Petrosky score is 6. That is great. They are just in the gray zone here at the Altman C score, but that's not really something that concerns me. You can see earnings per share normalized. It dropped a bit in 2020, but estimates are that it'll be going up in 21 and 22. We can see that free cash flow is going up nicely here. Dividend cover, not that good in 2020. It has been in the 3 and 2 here, and that's what I like to see, that they have enough earnings per share to pay for their cash flow. But you can see the free cash flow here, 7.68 in 2020, and dividends per share 4.12. So there is some room here from the cash flow, and I do like to see that. Working capital is going up, net debt about the same. Interest coverage is reasonable. It can pay for the short-term interest 6.6 times with their current earnings per share. So basically, absolutely a stable, solid company here. And you could just invest in this just because it is a sane investment. But you could also have a look at it in the context that if an infrastructure plan is coming, then some of these companies would definitely benefit from it. There are other ways to have a look at it. For instance, here we can see in TradingView, this is the template that I am offering to my Danish subscribers, where we can see if the stock is in a green zone on a weekly chart, and it is right now, meaning that the RSI is above 50 and the comparative relative strength is also in an uptrend, meaning that the Caterpillar is doing better than its own index here, the SPY. So that is on the weekly chart. On a daily chart, if you were to invest in it right now, you could see that it is in a very good uptrend here. As for the regression channel, you could argue that it is a bit expensive up in the top, so some people would wait for some sort of retracement. But basically what it does right now is it's bouncing on its 20 SMA. It is showing some great strength here and the RSI, and yeah, there's not much to say about this. From a technical point of view, it's in a fantastic uptrend. I entered it somewhere, let me see, down here, about here, 180, 81, something like that. It was in a green zone. It broke up very nicely here, made a new top, and it did so under some great volume, double volume that the normal average here. And you could have said at that point, well, why are you buying at 180 when it has just gone up from 90 here? It has just gone up 100%. Why on earth are you buying at 180? And as you can see, since then, from around the 180 mark to up until now, let me just have one here. It's up around 25%, so that is absolutely decent. Caterpillar, one of my favorites here. You could also have a look at it in the fast graph, as you know. If you've seen my videos before, the fast graph here is a bit more of a fundamentally focused platform. And this one shows that we have the growth in earnings here, which is expected to go up in the future here. And you could say from a value standpoint that this is not the best investment case. You would want it down here in the green zone where it is below the growth or the earnings growth here. So every time it has been down here in the deep green here, or dark green, there has been some great upwards potential. So you could argue that right now there's actually some way down to just justifying the price right now. It would have to go down. That is not always the same way to look at it, if you ask me. But if you are a long-term value investor, that could definitely be a way to look at it. All right, let's have a look at a couple of the others just to give you an idea, and then I'll close it off for you today, and you can do your own research here, which of course you should always do. There's the Deere & Co. And that is, you might also know that, one of the really big ones. The company is engaged in providing financial services. The company operates through three business segments: agriculture and turf, construction and forestry. So this is not really into the machinery in that sort of view, but it is still in the same machinery, equipment and components here. Let's have a look at some of the others. Johnson Controls International, I guess you're aware of. There was one down here. I was actually not too aware of that one before I took a look at it. And as you can see, this Trane Technologies, formerly known as Ingersoll Rand Public Limited, then you might know it from that name, provides global climate solutions. The company offers its products under the brands such as Trane and Thermo King. Its segments include American segments, which innovates for customers, blah, blah, blah. It is cooling systems, building controls and energy services and solutions. Absolutely also a company that could have some great future here if an infrastructure plan was coming. So take a look. You can see down here there are many of the well-known names: Stanley Black & Decker, Rockwell Automation, we have the General Holdings, Jacobs Engineering, many of the well-knowns and some of the lesser-known companies. But try and have a look at them And if you have some questions for one of them, or if you want my opinion on one of them, you're welcome to ask me in the comment section below here. And as always, I'll put a link to both the Stokopedia and the TradingView platform in the text below, as well as this article about the Biden's infrastructure package. I will touch on this on a later notice, and I'll try to keep track of how far this is going. It might be dead already. It might be that there's no room for it, that they can't negotiate anything. But this is Biden's ambitions. Like it or not, if it goes through, the infrastructure sector and industry groups are definitely something you should be looking at. That's all for today. Take care of yourself and your money out there. And oh, by the way, I should say, to those of you that haven't been in on our new site, Invest Like a Guru, we are giving away our the trades from our ETF strategy that we're using on eToro. So you just have to press the link below in the text here, go in and put in your email address, and every time we hit the first of the month, you will get all the signals, all the trades that we are doing in the ETF strategy. It has been making around 16 to 18% per year since 2012, so it might be something we want to have a look at. That's all for today. Talk to you again very shortly. Bye for now.